Well, hello and welcome to the very first real estate market snapshot of 2025. I can't believe we're here. I'm a little bit late to kick off the year. Normally I put these snapshots out the first week or 10 days or so of January. Today is January 26th, so I'm a few weeks behind. But at any rate, we're kicking it off. So we've got a real estate market forecast with our snapshot for January 2025. The same QR code now that we have been using for, gosh, I think it's been 4 or 5 years now. Everything I've ever done basically can be found here. If you're watching this on YouTube or on Facebook or whatever, the link below basically takes you to the exact same place that the QR code will take you, which has all the charts and data and probably more stuff than you'll ever want. I did want to take a brief moment to thank everybody at the Riverside County Office of Economic Development, RIVCO. We did that Economic Housing Summit, or the Economic Summit in part was housing. I guess that was my part back on December 5th. Seems like it was yesterday or almost 2 months ago. So if you missed that and you wanted to see that slide deck or the video of that, same QR code actually, same link below, you can go check that out. And I don't have it up yet, I just realized this earlier, but I also have the rest of the presentations there as well, so you can take a look at all the stuff that we did with RIVCO. And again, big shout out, big thank you for everybody at Riverside County to allow me to participate in that. That was a heck of an event. So let's go ahead and jump in, do our normal monthly thing. This is our inland Southern California. By the way, I just noticed this morning after years of doing this, we call this the inland Southern California. Well, not everything we're doing is inland. I mean, half of the stuff I'm showing you has nothing to do with inland. We're doing LA and Orange County as well. But as always, let's start with price. So what's going on? This is our year end. So for those of you that are kind of like, well, what happened in 2024? Well, this is your 2024 data. And quite honestly, me waiting, which was not intentional by the way, but me waiting until almost the end of January lets all this data kind of settle in a little bit. Sometimes when I do the reports early on in the month, the data shifts because this information comes from CRMLS, which is basically the realtor database where all the listings and sales and everything go in. And quite honestly, realtors can be a little bit slow and a little bit lazy in putting that information in. So now that we're basically 3.5 weeks into January, most, if not all, of the December and the 2024 data is all settled in. So this is the first chart. If you really like this stuff, you can, again, click the link below, go to whatever slide we're on, number 3 or number 4. If you click this link, this will give you 15 years of price data for Riverside, LA, San Bernardino, and Orange County. And here it is. So a little hard to see, and I'm not isolating it, but bottom line, prices were stable the last couple of months. But for the overall yearly shot, what this is comparing is December of 2024, just passed, to December of 2023, 12 months ago. And quite honestly, this is good. This is a price appreciation number that makes me feel a little bit, okay, there's a certain amount of normalcy, whatever that means. Orange County up 5.2%, LA 7.7%, Riverside 3.3%, San Bernardino, I guess, takes the lead here with a total of a 10% appreciation number, December to December, basically. Let's just call it the entire year of 2024. So that's pretty healthy, even though San Bernardino kind of did that 10% number. Again, these things tend to balance out. But next month it might look a little bit different. But mid-single-digit numbers for the most part is what we need because we haven't seen that. And now it's partially what's got us into our trouble here. So again, here's our median price in the 4 counties. Moving on to supply and demand, new listings. There are listings taken in the month of December. Again, same 15-year chart. If you want to go back and see what all that looked like for the last 15 years, just click on the button, click on the link, click on the button. You can go back, hover your mouse, and you can see all of that. But this is kind of one of those charts. It's got that EKG look to it. All of the bottom numbers are basically now, December, 4th quarter, 1st quarter. But pretty much every single one of these bottom spikes are December, where we currently are. The peaks are normally somewhere between April, May, and June. Take a peek at them, but as you can see, as we go through the new listings, these are listings taken in the month of December, record lows. I mean, just record lows. So where are we? Now, year over year, same thing we just did with prices. We're comparing December 2024 to December 2023, 5% up, 10% up, 10% up, 3% up. So that's great. So on balance, you might sit back and say, Well, geez, what's the problem? I keep hearing we have an inventory problem, but it looks like all of the listings in every county, new listings, are higher in December 2024 than they were a year ago. That's true. But if you've been watching these snapshots for any period of time with me, a year ago I was griping about inventory. Inventory was too low 2 years ago, 3 years ago. So I've added a new slide to kind of close out the year, so to speak. So I'm comparing the December new listings, same exact data we just looked at on the previous chart, but I'm comparing it to 2020, which, by the way, 2020, if you go back and look at my videos from then, I wasn't saying, oh my God, we got a flood of inventory. I was probably saying very similar stuff to what I'm saying now. We need more houses to sell. We need more houses to sell. So if you just want to go back and take a look at that, these are the December numbers in comparison to December of 2020. 40% less, 34% less, 22% less, and 34% less. So this is me on my horse basically saying we still just don't have enough houses to sell. So what does it mean? I got a bunch of different audiences here. If you're a seller, hey, if you want to sell your house, list it, price it right, you're going to be sold because there's not a lot of inventory. If you're a buyer, you don't have as much to choose from, but again, there's not also because of interest rates, which we'll talk about in a minute, there's not as many buyers. So, but your selection isn't as good as it was, certainly wasn't as good as it was 4 years ago. But what was happening 4 years ago? You had 20, 30, 40 people bidding on the same house. You don't see that now. So we got some challenges there. But this is that inventory number, which really, if you go back to this chart, like, oh wow, everything's great, inventory's up. Well, it's better. It's better than it was 12 months ago, but we still have this overhang of inventory problems, which is what I just shared with you. So that's the new listing data. The chart that I started throwing up for you guys a little bit later is all the listings. So those last chart was last month. This is all the listings on the market that have sold, that didn't sell from April, May, June, July, August, whatever, all the way up until now. Again, click on that if you'd like. It's there for your looking. Again, December to December, 3%, 7%, 14%, 13% up. So again, there's more inventory out there, which again, that's a good thing. But again, we still need more. So even though those numbers are positive year over year, we're still struggling on the inventory front. That is for sure. I did not do all listings and compare it to 4 years ago. You guys actually can kind of do that yourself if you want. Just go to that prior chart, click on it, then if you're really into that, you can take a peek at it. Pending sales. This is the pain point. This is a pain point for me. This is what I've been bitching about now for, oh my gosh, a very, very long time. So same 15-year chart, record lows, same EKG. We're way down over here as far as pending sales. These are buyers and sellers coming together, buying houses. This is how I pay my bills and make a living. So what are we looking at here? Again, the December to December, modest increase. So Orange County improved 1.5%, LA down 3%, Riverside up 3%, San Bernardino down 11% year over year. So that's kind of rough. I tell you, it's December. We didn't sell as many houses as we'd like, but if you've been doing this for any period of time, you kind of expect that in December. The challenge, of course, I did another chart similar to what I just did on the other ones. If we go back and we compare sales back to 2020, December of 2020, which was the COVID year, which is weird because sales actually during that COVID year were not bad. But they weren't great, but they weren't bad. But look at these numbers. Let's go back a slide. So this is where we are December to December, December 24 to December 23. Basically up, somewhat flat, up, well, down 10%. That's not a small number. But now let's go back and compare them, similar to what we did with active listings. 50% fewer sales in Orange County, 45% in LA, 43% in Riverside, and 53% fewer sales than 4 years ago. That is brutal, okay? Especially, again, I'm speaking for myself. If you own and operate a real estate company, boy, that's tough. So here we are. So again, who you work with matters. I mean, this is no market. If you're a buyer or a seller and you are in this situation where you're thinking about jumping into this market, call me, work with professionals, myself, Drew, the Martin Group, our team at Coldwell Banker Town and Country. This is no time to be running around and listing your house with your niece's friend or whatever it happens to be. You just got their license 2 days ago. So at any rate, here's your pending sale chart. Pretty brutal from 4 years ago, but the march continues. It is December, it is January, or actually these are December numbers we're looking at in January. This is to be expected. In theory, this is the worst of the worst. I hope it's the worst of the worst. I threw this chart up a couple of years ago. I don't know how well you can see this. This is from Wall Street Journal. I believe that this article was posted on, Friday, January 22nd. U.S. home sales fell to lowest level in 30 years. Yep, That's it. You just saw it. You just saw it. And by the way, when they say home sales, they're basically talking about those transactions of buyers and sellers coming together and putting that escrow together. So, okay, yes, I have confirmation from the Wall Street Journal that what we've been talking about for the last few years is absolutely correct, and it is correct. Now, I don't have another article similar. Probably wasn't the Journal, although it very well could have been, talking about how our home sales have increased, how they've picked up. It's very true. I just showed you that. I showed you some of those pickups, but they're showing it from a period of time where just a very, very small number of sales would make that percentage look very, very good. That's why I went back and said, well, let's take a look at a few years ago, and then you see those 40 and 50% reductions in sales. So at any rate, it is the same thing we've been talking about. We are in a very interesting, somewhat broken real estate market. Let's dive in a little deeper. Days on market. So what's going on with the days on market trend? This is something that a lot of buyers, I don't know if a lot of buyers look at it. I know a lot of realtors look at it and they think that their buyers and sellers look at it. I don't know that that's true. This can be an indicator of things to come, good, bad, or otherwise. The 19 days, 21 days, 32 days, and 30 days, let's just call it 30 days or less days on market in the 4 counties, that's nothing, okay? Now granted, it's up. This kind of what I was just talking about. You might have seen an article in USA Today or whatever that said sales are up or whatever it happens to be. You might see a post from somebody on social media or otherwise that says, oh my gosh, the days on market in Orange County are up 46%. Oh my God, that's horrible. A big number in theory would be bad. Okay, well, it's up 46%, but it's still only 19 days on market. Again, nothing, all right? So from a standpoint of what the market's gonna do, we have low inventory, few sales, days on market very well may be rising, but I think all of us would agree if I listed my house today and I'm priced where I want to be and I'm reasonable, if I had the thing in escrow in a couple, 3 weeks or 30 days, I probably would be happy with that. I think most of us would be happy with that. So, don't pay too much of a look at the percentage increases. Just take a look at the number itself. Now, the next chart we're going to look at is month supply. Now, this one's got my attention a little bit more. Its month supply has been rising. So, Orange County is 1.8. Just call it 2 months. LA 2.6, 2.5. Riverside 3.4 months, and San Bernardino 3.5 months. That might not sound like a lot, and it's almost a little opposite of what I just said a second ago, but we have seen the month supply of inventory, specifically in Riverside, San Bernardino County, all of them for that matter, below 1 month for a decade. Okay, it sneaks up a little bit here and there, it sneaks down a little bit, but the fact that these months supply of inventory is going up is something I want to keep an eye on. I keep an eye on all of it, but I'm going to keep an eye on it. But you can't look at that in a vacuum. You got to take a look at it with days on market. The days on market is still very, very reasonable. So that does not concern me, but that is an indication of basically fewer buyers and sellers coming together. And why might that be? Well, we're going to talk about interest rates here pretty quick. But first of all, I came back to do my Spotlight City thing again. I have a client who's thinking about purchasing in Palm Springs. I talked to them yesterday. I said, what the heck, let's do, I've never actually got this specific, but Palm Springs condos, only condos and townhouses in the entire city, no other limitation on there. If you have any interest in that, you can click on all these links. What's the prices? How many listings are available? What are the sales? The same sort of data that we just looked at on the prior charts. I'll just isolate this because I've said this many, many times before as well. Okay, Palm Springs condos. Blink your eyes and say Temecula single family or Newport Beach, whatever, okay? The charts are so similar, okay? They're just so similar. So this is price, median price for all condos and townhomes in the Palm Springs market is just under $400,000. If you search average price, it's like $425,000. We can talk about that later if you're into that. It's basically kind of come off of a peak. I think this was closer to probably $475,000. But this is everything. Now, the one thing you got to keep in mind, wow, that sounds super reasonable. I can buy a condo in Palm Springs for under $400,000. Well, that's true, but you also might have $800 association dues or $1,200 association dues. So there's more behind this number than that. But again, the pricing model looks so similar to everything else. Active listings, yes, what's going on? Listings are down. Now, interestingly enough, and again, you got to remember Palm Springs market's different than Inland Empire market, for example. It is season down there. So if I did want to basically sell my house or do something with my house, I have a lot more eyeballs on my property in Palm Springs today than I would be in June or July, which might be the exact opposite for a property in Riverside. So you see that their inventory actually has somewhat crept up, but only 321 houses, which, by the way, that sounds like a bigger number than what I would have expected. When I went to run this, I wasn't expecting to see 321 condos and townhomes available in the entire city. So that's that. And then the pending sales, though, but I kind of killed the chart here a little bit with this graph. There was only 53 units that were actually put in escrow in the entire city of Palm Springs last month. This is December, by the way. But just look at the volatility you've got here. Had a pretty good, I guess this would have been October, back down in November and December. But at any rate, again, you can click into that if you want. If you're into a different city, just send me a message. I'll give it all to you. But the main reason I'm just even looking at Palm Springs is, again, if I pull up any city in Southern California, there's more similarities than differences. So anyway, so there's our spotlight city. Now let's talk about interest rates, the Fed, the entire overhang of what's going on with our real estate market. This is the part that really truly makes me feel helpless as a business owner. Try to put together a business plan, support my agent, support the company, support my buyers and sellers. But there is this just one piece of the marketplace that we have zero control over, and you almost kind of just sit back and you're waiting. You're waiting for somebody to do something. Election's behind us, okay, we'll see what sort of results that have. But by the way, I don't normally get political in these things, but Trump came out. He's only been in office for 6 days since this thing's been shot. I think it was 3-4 days ago. Basically, I don't want to misquote it, but more or less demanding that interest rates come down. We'll see how that works out. So for selfish purposes, I would love to see interest rates come down. So again, you can click on the chart. This takes you to Mortgage News Dailies. This is where we were as of Friday. The 10-year bond, 4.6%. It's a killer. And we basically had an aggregate of all of the 30-year fix at around 7.11. If you just talk to a lender and they said, Lance, I can get you into 6.5. Okay, yeah, certainly. There are certainly lenders who are going to do better than that, depending upon credit, down payment, loan program, and all the rest of that. But the trend has been higher for the last month or so. It's a killer. It's an absolute killer. So just to put that in perspective, before I put it in perspective, I threw this chart up at the Rivco event we did on December 5th, and I actually stole this. I stole this from Walter with Franklin Financial. I forgot Walter's last name. I apologize, but I want to give him credit for it because I had never heard this. I'd heard it, but I hadn't heard it in the way he presented it. Went to his forecast, and he was talking about a magic mortgage rate of 5%. I said, or 5.5%. And I thought, well, that's interesting. That makes sense to me. I'm sure I've seen similar stuff. But I actually didn't know that there was actually people out there calling it the magic mortgage rate. Okay, well, CNN and CNBC and Yahoo and whoever these guys are up top seem to have dubbed this magic mortgage rate. By the way, Walter at Franklin Financial is a loan guy, so he would know. But we're about as close together as you possibly could be. You own and operate a real estate office, you own and operate a mortgage company. The two go hand in hand. They need to do loans, we need to sell houses. So he points out this 5.5% magic mortgage rate, and boy, it's a very simple way to understand how our industry works. So here's a 10-year chart of mortgage rates. This red line that's kind of pulsing there, I don't know if that's coming across on the video or not, that is the magic mortgage rate at 5.5%. So this is COVID. This is where we were. All things were horrible and bad during COVID, of course. This is our peak so far, October 25th. Approximately, we are just under 8% on 30-year fixed mortgage, and then we've got the rest of the year. So again, COVID, bad, bad, bad. Well, you know what? It was bad, but I tell you, from a standpoint of the real estate market, it was hot. The people that actually understood that rates were low, at all-time low, record lows, took advantage of that, and bought. Wow, you know, pat yourself on the back, you did a great job. So wow, what a wonderful market we had at these low COVID rates, basically all the way up until, guess what, about 5.5%, which we were griping about 5.5%. But now we've been frozen, and that's literally where we are right now. We are in a frozen real estate market, in large part for all the things we've talked about in our forecast here now for the last couple of years. We have people who own properties with very, very attractive mortgage rates on it that are unwilling to give those up, or they might give it up, but they can't replace it with anything close. They're replacing it with a 6.5 or 7+ % interest rate. Or again, you're a buyer that says, hey, I want to buy, but man, maybe I'll wait for interest rates to come down. So there is a certain amount of frozen status to our marketplace. So we shall see. But it is just kind of is what it is. I don't normally talk about new home sales on the snapshot, but I had these slides in at the December 5th event, and I thought I'd bring these to, and by the way, if you are in the market to buy, and either because of what I'm going to tell you or because you've been looking at that anyway, and you're like, hey, well, geez, maybe I should look at some new home sales. Call me. We can help you with that. We can help you with the builder. Yes, we can also get paid. Yes, I'm a little self-serving here. But the reason I bring up these, there's dozens and dozens of these builders out there right now, but I've just highlighted 2 of them for no particular reason other than so many of the builders now have special financing rates where they are buying down your mortgage as the buyer to 5% or below. Okay, these are not necessarily buy downs. They could be. Be careful what you're negotiating, which is why you need to call me. But these are not necessarily, oh, I just get the first 2 years, I get a low rate and then it goes up. Some of them are like that. But these are 30-year fixed mortgages that the builder with their lender partner have bought down to 5% or below. So here's just a couple of samples. This is one out in Palm Springs, $700,000, and I've got another one I think here in Riverside. This is D.R. Horton at 5.25%. Again, yeah, pay attention to fixed rate or to APRs and all the rest of that. But if you're so tied up in the interest rate that that's the only thing that you can focus on right now, maybe some new home construction is there, or maybe if you are a seller and you're thinking about how can I differentiate myself from the guy down the street on a resale, well, let's maybe consider doing a buy down for the buyer. This is definitely in the marketplace. It's not new, by the way. This has been done forever. So in the last couple of years, I haven't really done much of a forecast on this. I've kind of looked backwards and said, this is what I think the data is going to do, but I'm going to change that in 2025. So as of right now, this is my forecast for this year. I think we're going to see prices increase ever so slightly. More or less kind of a mirror image of what we did last year. That seems to make sense for me. Inventory up, more to choose from. But up from what? Up from record lows. It's not, I mean, good. Could we go lower from this point? I suppose, but good Lord, we seem to be at the bottom of the bottom from an inventory standpoint. So me saying we're going to have more inventory, it's not much of a risk for me, but I'm thinking we're going to have more homes to sell. Sale volume up. Those are those pending transactions that we were talking about. Yeah, I think it's going to be up, but we're coming off record loads. So both of these two, inventory up and sales volume up, it's not much of a risk for me because, I mean, can it get any worse? Did I just say that out loud? I suppose it could. But I certainly believe we're going to see inventory up and sales volume up. I have no idea what's going on with interest rates. Every single person that I know and trust that I've looked at for interest rates in the last 3 years has been wrong. Ironically, the one guy who hasn't been wrong is the guy that I didn't think he was as connected to mortgage rates. Frankly, that's Chris Thornburg. Chris Thornburg's been saying, no, the market fundamentally should not be supporting interest rates back in the 5s again. 3 months ago, when the Fed started talking about their rate cuts, which they've been doing, everybody in my world that I trust, and I don't mean like realtors and brokers and stuff, I mean on the economic side, we're like, oh yeah, we're going to see rates sub 6% before the end of the year. All of them said that. Chris said, no, we're not. No, we're not. And he was right. So we shall see. Having said that, if we can see interest rates in the mid 6s or lower, I think all of these numbers change, and they change on the upside, okay? Right now, let's just say we're a little bit above 7. If we could just come back to 6.5 or below 6.5 and we could stay there for the year, that would be my Christmas present to myself. Then quite honestly, I think prices will go up more than slightly, inventory will go up more than a little bit, and sales volume will go more as well. But as long as we're bouncing around in this 7% mortgage rate area, we're frozen. Market breaks at 7. I've been saying that for 4 or 5 years now, and we're at or above 7 right now. So it's challenging. So we'll see what happens with those interest rates. So that basically brings us to the end. Same QR code that we did before. For those of you that are actually clicking on these, and there's a lot. I get 100. Yeah, I get 400 to 500 clicks on this link right after I do this. I don't know if that's a lot or not, but that's what I get. So it's coming from you guys. But if you keep going on this, there's a whole bunch of other content past this. This slide, technically, the thank you slide, is the end. However, if you want to keep on going, I got a whole bunch of bonus stuff and some stuff that you might find interesting. So at any rate, Happy New Year. Hope you have a great 2025. If you're thinking about listing, buying, selling, property management, Coldwell Banker, Town and Country, the Martin Group, we're your guys. We will see, actually, we'll see you in about 2 weeks, because the February Market Snapshot, we're going to get that out probably about 2 weeks from today. Anyway, have a great January. We'll see you next time.